We have Zach Strickland here, filling in for Andrew Cox today. I'm Kevin Hill, of course, and we are going to talk about a little bit about the stock market, which has been a roller coaster the last couple 3 weeks.
It's taken a ride.
It's taken a dive more than anything.
But
over
it's
the
up
last
today.
Few days. It is up today.
600 points right now?
600 points right now. It was down 3,000 points yesterday. So we will see what tomorrow brings. We'll see what this afternoon brings, really.
This is the new normal.
It is a new normal. It is one of those bear markets where you have these incredible rallies, these incredible losses. Every day is just more volatile than the next.
Yeah, you have the quants that are, of course, trying to cover their positions. And then, of course, as you hit, everybody stops. It just waterfalls down, and you get these little intermittent recovery days, and it's just kind of this stair step until something fundamentally changes.
It is. You have lower highs and lower lows.
Yep.
You have a lot of margin calls in the market where you can see that, Friday it rallied up to 10% in the last hour. Yesterday, it just kind of completely went downhill.
Well, we had some signals from the Fed that I think inspired a lot of that. They were basically they're pulling out their big guns saying everybody's going to get money and all this kind of stuff. So that doesn't necessarily send a signal of confidence to the investors.
It really doesn't. There's a lot of nervousness out there as well. There should be. We're in very unknown times right now. So I guess just take it day by day, but we'll go through some stocks here in a little bit and see, basically, consumer packages is probably pretty good. Retailers, big box.
You would
anyone
think
selling essentials are doing. We'll have pretty good earnings going into coming out of Q1. Now, where it goes from there, we'll have a little discussion about that as well. Right. But first, Andrew Cox maybe earlier this week or later last week, pre-recorded an interview with Doug Schrier, who's VP of Product and Innovation at TransFlow. And they sit down and discuss some of the things that's going on right now and what TransFlow is doing as well. So before we get started, let's cut through and take a look at that great interview that he did.
All right, welcome into this interview for a great quarter, guys. I am here with Doug Schrier, the VP of Product Innovation at TransFlow. How are we doing today?
Doing great. How are you?
I'm lovely. Where are you in from? You guys based in Tampa?
We're based in Tampa, downtown Tampa. It's beautiful this time of year and starting to warm up.
What was did you guys fly up here?
We did.
What was the airport like?
The flight into Chattanooga was actually quite full. I was expecting it to be empty, but Atlanta, you fly through Atlanta a lot when you fly out of Tampa. It was, I'd say, probably at 50% capacity, but it's kind of airy how empty it was.
Yeah, I saw a video from Washington Dulles, the airport in D.C., and it was like ghost town. I mean, it was like something out of a movie. There was one person in line at Starbucks. There was 4 people at the gate. It was bonkers.
And the flight out of Tampa that's normally oversold, about 50% of the people, didn't show up or weren't, empty seats.
Wow. Yeah, I've got a flight scheduled to New York next month, middle of next month. So we'll see how things are going there. I think it'll probably get canceled, or the thing I'm going up there for will probably get canceled. Yeah. So may not have any reason to go up there. But let's jump into it. Let's go into your background a little bit. What did you study in school?
Industrial engineering and system engineering. So, kind of came in from a pre-med standpoint and decided after 2 years that wasn't for me, and went to engineering. Finished up school down in Atlanta.
I heard you. I watched your interview with Craig on Fuller Speed Ahead. You said you weren't in freight originally. Was Covenant your first job in freight?
I did one that was in supply chain for Iron Mountain, consulting project in supply chain for Iron Mountain, but it was a first true truckload customer. So we walked in and thinking that trucking was simple and easy, moving freight from point A to point B. How difficult could this be? And we realized that it was quite the feat, and had a great, very successful time at Covenant. Yeah,
I did the same. I graduated back in May, but I've been here since October. I definitely, it's funny, I always told people that when I graduate, the one thing I'm doing is I'm not working in freight. It seemed I had so many friends working in brokerages or tech companies or whatever. I just thought, I'm going to do something different because, again, freight is simple, but it's so not. It's so complex.
Yeah, it's doing it at scale, right? Maybe moving one load is simple, but when you do it at the scale that these trucking companies or brokerages do, it's just a very daunting task at the end of the day.
Right. So at TransFlow, you're the VP of Product Innovation. What does a normal work week look for you?
Yeah, so I get the benefit of dealing with a lot of customers. They're professional drivers, finding out what their problems are and trying to solve it. And then also helping us determine what we need to solve next. Everyone has problems. All of our customers have problems, but identifying the right ones to solve and when to solve them.
Right. So what's some of the big problems you come from? Because you guys work with drivers and brokers. What are some of the major problems that come to you from the driver's side, and then we'll get into the broker side after?
Yeah, I think one of the strengths that TransFlow has is their mobile platform and the ability to communicate through the mobile platform. And what we're working on now is a problem of opening that up. We've traditionally had that open for the carriers and their drivers and improve communication within our mobile app. We were able to grow to a big footprint within transportation, one that's probably the leading footprint for mobile technology within transportation in the U.S. But how do we take that and open it up for the brokers? So frequently, a driver will have a question that the broker has an answer to, and instead of the driver being able to directly go to that broker, they go to their carrier rep, fleet manager. Fleet manager goes over to customer service rep. Customer service rep calls a broker. Broker might have to call the shipper, and all that takes time.
It's a lot of steps.
Yeah, a lot of steps, a lot of inefficiencies within the supply chain. So that's what we're opening up. Is our new Velocity Plus ecosystem allows a broker to give the mobile application to a driver for a single load.
That seems a bit like, it reminds me of something like a blockchain or like a public ledger, in that you have open visibility so that everyone that is involved here is held accountable for their steps. Is that correct?
Absolutely. Accountability, communication. Really, we're focused on the execution of the freight. So the point the freight is tendered, whether it's a carrier or broker tendering the freight, all the way through load payment.
So what makes TransFlow unique in the sense of being that piece of the puzzle? Like why should I choose TransFlow over another visibility or communications platform?
It boils down to trust. We've been in the industry for 30 years. We've built a massive footprint in what we do, and that footprint continues to grow. So again, the largest mobile app within the space. With that, we've have drivers that use us as a verb. They say, I TransFlow. Whether they say, I TransFlow documents or I TransFlow to get paid, is a verb for the drivers, and they trust that. They trust using TransFlow. So instead of trying going out and opening up your mobile app, or trying to create your own mobile app, going to a point where they go to a trusted provider, open up a mobile app that they've used before, and interact with you is a much better experience.
I'm glad you mentioned how long you guys have been around. I obviously haven't been around much, but they say that TransFlow is a name that's been around for a long time, and it is a very trusted name. Can you give me, if that's one of the three pillars of adjectives that you would describe TransFlow? If trust is one of them, what are the other two?
So trust is one. Good listeners would be another one. So we listen to our customers. We try to understand their problems, and we work hard to solve those problems once we understand them. So we use things like mobile advisory boards and advisory boards with our customers to solicit feedback. We also go directly to the drivers to solicit feedback. So being a good listener and understanding the value that we can bring in solving those problems is another key piece of it. And the other one is being agile. So we are a company that started as a scanning company, and handling the paperwork across the nation and helping fleets bring that paperwork that's sitting in the truck back to their back office so they can bill their customers, their shippers, and ultimately pay their drivers as well. So that was the first problem that we went out to solve. Today, we're solving mobile issues. We're solving the ELD scenario. We have a full mobile equipped ELD where the drivers prefer the experience is really easy for them to use. They understand how it works, and it's just intuitive for them. We're also deployed our mobile application is a true mobile application. So it's not a lockdown experience. They can go grab any Android or Apple device and run our platform on it.
You mentioned a bunch of things there, a bunch of different aspects of things that you guys do at TransFlow. How do you guys maintain focus or even choose on what's most important to ideate on next?
Yeah, so we use some standard product management approaches, and one of the things is prioritizing it. The priority of items changes daily as we understand them and as new opportunities come in. But we like to have a focused team focused on a problem once we decide to solve it. So we'll decide we're going to go attack this quarter. This is the resolution that we're looking for. This is a problem that we're solving. Here's how our customers told us that we want to solve it, and we'll focus on that till we get to at least a first iteration of a solution. And then we'll continue to do that through an agile type approach.
See, I didn't want to jump into the coronavirus this early, but I got to ask, has the coronavirus, has it impacted any of the priorities that your customers come to you with? Has it changed the way that they're asking things from you?
Not yet, but we definitely expect it to change. Some of the things that we do allows for a remote workforce. So for example, we live in Tampa. Tampa has to deal with the fact that hurricanes flow through Florida all the time. So we won't be impacted by the coronavirus and the fact that if we had to shut down our office and work remotely, we can do that. Our customers will still get the same level of customer support and services. But in regards to how do we enable people, so the driver doesn't want to walk into a truck stop and use a truck stop scanning, we can turn on their mobile application today. If they're trying to do central scans or scanning in their back office and now all of a sudden they don't have access to those flatbed scanners and they want their drivers to do that, or they want their people to be able to do that from their house, we can enable that as well.
I've been hearing this idea of neutrality for a few weeks now. It seems like from industry execs, especially tech execs and freight tech, saying that they're not trying to step on anybody's feet. Does TransFlow consider itself a Switzerland, a neutral platform?
We do, absolutely. It's one of those things. If we weren't, trust wouldn't be aligned with TransFlow. But we serve many parties within the transportation sector. And we work with each party to try to solve their problems, right? And when there's an opportunity to cross and work with two parties or two different groups of people within the supply chain, we'll definitely do that to streamline the whole experience. But the benefits for both parties, it's not one-sided.
So we touched a bit on brokers earlier, but I have a question about brokers, and specifically, do you think eventually that TransFlow could eliminate some brokerage jobs?
I don't think so. Could you eliminate some back office steps? Absolutely. But securing freight and booking freight, booking carriers on that freight, you may be able to drive more efficiency with that and have a better coverage ratio. But all that means is you have more brokers within your office, or you're repurposing that person that was once scanning paperwork or processing payments within your office, and you're putting them into the areas that actually bring value to you. So we believe it's our company's, responsibility to bring technology forward. Then our customers determine what that means for them. And what we want to do is help our customers grow, both in a footprint and how well they're doing as an organization, as well as profitability, right? What it takes to operate their company.
I'm glad you mentioned that because, I've seen so many digital freight matching platforms, whether it be Uber or Convoy. They say that they're coming out, and it seems like their original approach was to eliminate the brokerage and digitize everything, but they've seemingly quickly understood that this is a very human-oriented field, and that if you're going to make it better, you have to implement technology that allows brokers to be better, to be more efficient. And it's good that you mentioned that you're really focused on just making things more efficient rather than trying to eliminate the whole position.
Yeah, we don't want to be a brokerage. We're never going to try to be a brokerage, and we definitely don't want to put our customers out of business. That's not good business principles, right? So we want to make our customers successful.
So what does the next 3 to 5 years look for TransFlow? You've implemented this new brokerage product and platform in the last 10 years or so. What's the next step for you guys?
Yeah, so it's continued acceleration. So new opportunities come up all the time. We were talking earlier today about one of them, driver health. There's a driver health epidemic, right? So whether it's mental health or it's physical health, how do we as TransFlow, a technology provider, team up with people that can help solve that problem, right? So we just launched a relationship with Aspire out of Atlanta, and it brings driver health solutions to our mobile application. It also helps them with mental things as well. So they run EAP systems and other things for fleets.
Well, that is lovely. We're actually going to do a project on, I'm going to write a deep dive next week on mental health and kind of how, unfortunately, drivers are likely kind of going to be disproportionately affected by this coronavirus.
Yeah, absolutely.
Well, what is the... that's the next 3 to 5 years. What if you could imagine an end game where TransFlow has reached its peak, where it is the best version of itself that it's ever going to be? What does that look like?
So for me, it's that everyone wants to use the platform. We're mobile first technology provider that, if let's say there's 3.5 million users within the U.S., they should or could use TransFlow Mobile, that we get as close to that 3.5 million as we can, and that we bring value to each one of them. They want to use us versus they have to use us. And they want to use us as a key aspect of it. The driver experience, driver enablement, and the driver engagements are all key to success for TransFlow.
Where are you headed next? You got any more any visits while you're in town?
No, actually, we'll be done here in Chattanooga, and it's spring break in Florida, so I'll be meeting with my family in Orlando.
Oh, that sounds
probably
nice.
not attending the park with the corona virus, but enjoying some time with the family and out of the office for a couple of days, and then back to Tampa and continuing to drive value for our customers.
That's right. How do people get in touch with you?
Yeah, so you can look at transflow.com if you're looking for an overview, or you can look us up individually. Just it's our first name, last name at transflow.com. So D Schrier at transflow.com, and you can get in contact with me.
All right. Well, lovely, Doug. Thank you so much. I would shake hands, but I think we should probably avoid it at this time.
Absolutely.
We've already been locked in a box here.
Be corona free.
That's right. All right. Well, thank you, guys.
All right. Thank you.
Safe travels.
And that was our very own Andrew Cox with Doug Schrier from TransFlow, the VP of VP of Product and Innovation at TransFlow.
TransFlow, yeah.
A very good discussion. Andrew is a very good interviewer.
Yes, he is. He's
I must
very poised in there.
He is.
You wouldn't know that that's not his job.
I know, right? That's not his job. He's just a natural at it, I think.
He is.
He is.
So flawless and unprofessional.
I know. Very good.
Yeah.
Well, let's talk about stocks.
Yeah. So
Let's talk about individual stocks. We were talking about the market before we cut away to that interview.
And the Dow's up to 1,000 points.
Is it?
So a third of the way back from yesterday.
It is. It is.
In just that
up.
short amount of time. I mean, that's how fast everything's moving. That's what's freaky.
It reminds me of 2008, 2009.
Yeah.
Financial crisis.
I don't know. I don't remember it being this weird.
You know what? There was days. Remember days where it was, and at that point, 300 points either way on the S&P, right? 300 points down. It might go up 300 points.
Yeah.
And then trade flat.
Right.
So you'd have these wild up and down swings, which I haven't seen quite yet, where you're deep in the red and then you shoot up deep into the green.
Right.
And maybe you end flat, or maybe you're in red, or it sticks there, and that's what it's doing right now. But I remember those crazy days back in 2008, 2009.
Yeah, I guess maybe I'm kind of prisoner of the moment, looking at that big number of 1,000. Like you said, back then it was like 300, 400, 500 points up and down. Now we're looking at thousands, and
it's certainly the market has grown tremendously
quite a bit since then.
Since then, right?
Yeah.
So the Dow, or no, the S&P was down to 666 was the low point in February, early March of 2009.
Yeah.
And it's rebounded.
We're what, 2,000? 2,100 now, somewhere in there. Yeah.
So it's been quite a run up, and it's just been quite a show the last 2 or 3 weeks.
Yeah, that's it's definitely a show. There's no doubt about that.
It definitely is. So what kind of stocks? So basically we have some here. Which ones are good? Or I won't say good names, but what industries have been benefiting from all this volatility?
Yeah, I think because it's obviously not an even playing field for everybody. I mean, we talk about it in trucking all the time. What we're seeing right now, a lot of goods are moving through the system still. We're not getting hurt, like Procter & Gamble, Walmart, Amazon, of course, is hiring 100,000 more people.
Yes, I saw. Yeah, they're hiring 100,000 more people, but they're kind of tamping down on the third-party sellers for, or not tamping down, but they're borrowing them for until I think May 5th.
Yeah,
for delivering non-essential goods into their warehouse.
Right. So some of the sectors that we're watching that we think are going to do better are going to be the ones, obviously, that are dealing with some of these material goods. Clorox, for instance. I was looking at Clorox today. This is one that looks like it's going to do just fine.
It is.
It's doing really well today. But it is up year over year. It's up year to date. It's one of the few that's up year to date. which is somewhat, it's not surprising, but at the same time, considering all these other stocks that we kind of watch they're not doing as well year to date. Like Procter and Gamble, for instance, they're in that same boat. They're down year to date, up year over year. So it's an interesting thing to watch. Again, I don't know if everybody, you would think that a lot of people know what Procter and Gamble specializes in.
Well, they have so many brands that it's hard to keep track of them. It's like Kraft Heinz. We did Kraft Heinz a few episodes ago, and they have $8 billion brands.
Yeah.
So it's hard to,
it's hard to
Oscar
isolate.
Mayer, I think some kind of mayonnaise that they have. I can't think of.
And
of the name of
surprisingly,
it.
you go to the grocery store and the condiment aisle is cleared.
It is.
And it's along with the toilet paper. Again, another Procter and Gamble item.
Pickles were cleared this weekend.
Yeah,
Pickles. Really pickles?
I mean, they're trying to grill burgers.
I guess so. And then you see these crazy pictures of people in the grocery stores over the last week, and you have one shopping cart, and I don't know if these are doctored or what have you, but someone had their entire grocery cart filled with eggs. Like cartons of dozens of eggs.
And how many eggs can you eat before they go bad?
I know. And milk too. The milk was the same way. Like 10 1-gallon jugs of milk in
Just
your
gonna
car.
chug milk.
I guess so.
It's that snow in the South mentality.
It is.
It's like,
really is.
I'm going to be locked in for 2 days. I need to get enough milk to last me 3 months.
I know, right?
Now, this is a little different, obviously, but
it is. Or 100 cans of soup.
Yeah, and so
can you really eat that much soup?
Well,
but before you're just like, man, I can't have any more soup.
The thing is, the soup makes more sense than the milk. The milk's going to go bad in a week.
Yes. I made too much tuna salad for tuna salad sandwiches.
Right.
And basically after about the 6th tuna salad sandwich, I was just like, I don't know if I can do this anymore.
Right. So
I don't know.
Right. I mean, some of these are pretty obvious. I mean, we're looking at Walmart, Costco, obviously, Target, Kroger, Walgreens, CVS. These are all like grocery store type environment. We expect these to have a really good quarter.
They're going to have a really good quarter, really good sales, and they are the safest from actually having a close down.
Yeah.
Right. They're not going to get closed down.
They are not going. Yeah. With all these quarantines and discussion over who's, when they lock down an area or when they're saying you can't go outside anymore, they're basically, they're not going to be impacted by it. They're not going to shut down. So they're not going to lose that foot traffic. People are constantly going to be in and out of their houses, going to these places. They're going to get transportation coming and going.
They definitely are. Another one here on the packaged consumer goods, Kimberly-Clark.
Right.
I think that's probably a good buy.
Yes.
Right?
That's not one that's super intuitive. Like, you're not thinking like, oh yeah.
I know, right?
Yeah.
3 weeks ago, Kimberly-Clark, like, who cares?
Yeah.
But now that there's not a roll of toilet paper in the United States, it's probably going to have good earnings.
Pretty strong. Very
strong. Very strong. I mean, we found paper towels yesterday down here downtown Chattanooga at maybe the only place, because it was downtown.
Right.
No one was shopping there this weekend.
Not a residential area.
Not a residential area. So they had plenty of paper products, which was a nice surprise.
Yeah. So Kimberly-Clark, Procter & Gamble, Clorox, as we mentioned. And here's a few that I wasn't thinking about. Pepsi and Coke.
Yes.
Canned sodas. Like, I know there's people buying bottled waters and things like that, but of course Coke and Pepsi both have their own bottled water and other bottled beverages. So again, it's not simply just canned sodas, but it's also all the other beverages that people are hoarding. So they're not hurting in this situation.
Yeah, but both Coke and Pepsi, they have basically every type of non-alcoholic beverage that you can think of.
Yeah, fruit drinks. I know Pepsi has like Nakeds, and Coke has another exposure to it somewhere, and they buy up all these other little small providers of drinks and beverages. But the one thing that I'm questioning here is what the sustainability of their quarter is. Now, they should have a pretty strong first quarter, and probably it'll lead into a good second quarter, because we're expecting, the CDC just put something out, said this is probably going to last for about 8 weeks before it, we see some noticeable turn.
What was it, May 9th? No groups. The recommendation, it's not,
and we could see
law, but groups of over 50. And basically that means you're basically self-quarantining.
Right. And we could see it turn before then. We just don't know. And I think they're being, obviously anything they put out at this point is going to be more cautious than anything. We're still seeing the rise of cases in the United States. It seems to be mitigated somewhat. I was looking at some interesting websites, and it looks like we're doing pretty well. Again, these statistics are a little bit deceiving, depending on the test.
I think they're very deceiving because we were talking about earlier today is the test. I think as of today, or as of this morning, there had only been 16,000 tests.
Yeah.
And basically, I don't think that's enough real tests to put a number on.
Yeah, the data sample is probably flawed.
It's very flawed, right?
Because I was looking at our stats compared to the rest of the world, and we're like one of the lowest incidences per 100 people. It was like 15 per 100. I think China was up at like 300.
I think we're testing at a much lower rate than the rest of the world, right?
Yeah, it was way lower. Our incidences are way lower overall. So we're not, China I think was up there. I'll look at I know the website. I'll look it up here in a minute. But
yeah, so some of the industries that have fallen out of favor, let's do that before we get to the stay-at-home kind of category of stocks, right? So as of yesterday, I don't know how energy is doing today, but since the 1st of March, energy has lost 37%.
Yeah, and a lot of that
staggering.
Yeah, and a lot of that has to do it does have to do with the coronavirus, but it's the Saudi Arabia, the oil
double whammy. Right?
Yeah, we're just they've targeted. OPEC has targeted the Western civilization. They're saying, we don't. You guys have held us kind of hostage here the last bit. You've taken what we had control over and made it your own. We're gonna take now and strike. And hopefully that'll start closing some of these wells down, the shale product in the United States, et cetera.
It probably will, and Russia jumped into it too,
Yep.
right? So it's basically it's a price war between Saudi and Russia to shut down the shale operations.
And I've had lots of conversations with John Kingston over the last year or so.
John Kingston's our resident oil expert here at FreightWaves.
He obviously understands the dynamics of the oil market and energy market way better than I do, but I noticed a tight correlation between how well the energy market does and transportation. Now, intuitively you're thinking, okay,
it's inverse sometimes, but go ahead, because it's not.
Yeah, it's not. It's not anymore. Back in 2007, 8, it was. That when diesel prices go down, trucking and transportation tends to be elevated and good because that's a cost. That's a big cost driver to them. Well, unfortunately, for transportation, not so much for the United States, they figured out we don't want to be dependent on foreign oil anymore. That's why we started opening up the North Dakota and Alaska and drilling into the shale domestically. But what that did was it made us a global provider of oil, crude oil, and all the products that come from that. So that's a lot of foreign money coming into the country that wasn't coming in before, really spurred an industrial style recovery in 2016 into 17. So 2016, of course, the oil market collapsed. The price of crude dropped from like $130 a barrel all the way down. Whoa.
Oh.
We got a caller? No. That's your phone. One ringy dingy. It's the button on the side.
Yes. Okay, there we go. It's set up for Bluetooth because we're going to have a call-in guest here in a second. So
right on. Yeah, so again, as the oil markets do better, actually the economy itself does better. And that's something we noticed in transportation. And when it falls off, when all those wells start closing, it's a trickle-down effect.
Yes, it is a trickle-down effect, and basically there is something to be said that $100 a barrel oil is bad for the economy. $40, $50 oil is bad for the economy.
Right.
But there's a price range in there that is good.
Yeah.
It shows signs of a healthier economy. Basically,
it's around 60-ish.
It's 60-ish. Yeah.
And the reason that's good is because the cost of production. It covers the cost of production in the United States because labor is a little bit more expensive here. Some of the smaller wells can remain open at that price, et cetera. But when you're keeping these wells open, that means we can produce. Also, it means we're going to get the opportunity to sell our oil to the rest of the world.
Exactly right.
Yeah.
So that's one area that has taken a huge hit, and then airlines.
That's an obvious one.
Airlines, really anything in the service economy is taking a big hit, and especially discretionary.
Yes.
Hotels, casinos.
Anything involving travel.
Anything.
Yeah,
I think cruises are down a little bit.
Yeah.
Right?
Just
a little bit. Just a tad, right?
I am. I'm not super deep into analytics into the cruise industry, but this is that. I just can't imagine what that's like for them.
I can't either. I really can't imagine what. I would not want to be the owner of a cruise line right now.
Not remotely. That's probably the least.
Not at all. Not at all.
Yeah.
Very good. Let's call Ryan Schreiber real quick.
Okay, let's do it.
We're about 30 minutes in the hour, and I think he was texting me. And
was that who he was? Is that who was calling?
Yeah, I think it was.
Yeah.
So.
Yeah, we were.
Let's see. There we go. All right.
Here we go.
Let's see.
Let's see if
there's
he
a
answers.
ring. There's a ring. He might be mad.
Yeah.
Who knows? Let's see.
This is Ryan.
Hey, Ryan. This is Kevin here at FreightWaves. Great
Hey,
quarter,
Kevin.
guys. How are you doing?
Yeah, I've heard of you.
Oh,
I'm
good.
pretty good. How are you?
Good. I'm here with Zach Strickland today.
Hey, Ryan.
Hey, Zach. What's up, buddy?
Just hanging out. Got a microphone.
Yeah.
Well, very
It's
good.
as good a place as any to be.
Right.
It is.
It's
it
probably
is.
one of the safer spots, honestly. We've got a nice little hold up
Yeah.
here.
So you're
Yeah,
working
for
from
sure.
home right now, Ryan, right?
I sure am. Yeah,
Okay.
absolutely.
How are you liking it so far?
Well, I just left my house for the first time in 3 days, a little bit earlier, because the weather in Chicago isn't exactly been cooperative. But otherwise, I'm keeping my sanity.
Very good. Where did you go?
I just walked around the neighborhood a little bit.
Oh, good. Get rid of some of
not
that cabin
many people
fever.
out. Like certainly, yeah, exactly. And I mean, it's surprising how many people are not outside right now. I'm wondering where everybody is. I mean, this is the first day of nice weather we've had in a little while. So,
Now
I'm wondering why those people are staying inside.
define nice weather in Chicago in March.
Oh, it's like 60 degrees and sunny right now.
Oh, that's
So,
legitimately nice.
That is really nice.
Yeah, legitimately nice. Yeah, I've got the windows open. Like, my wife and I were supposed to come to Chattanooga this weekend, so we took our winter coats to the dry cleaner. So, like, that's part of the reason I haven't been outside. As I said, we'll be in Chattanooga for 3 or 4 days. No big deal. Take the winter coats for dry cleaning. Huge mistake.
That is a huge mistake, isn't it? It is.
I guess live and learn.
Very good. So, CarrierDirect consults a lot of transportation businesses, and as we all know right now, those business models and workflows and processes are being disrupted in a major way. Can you describe kind of what you're hearing from clients?
Well, I mean, everybody's struggling with the same thing, which is not going to surprise anybody, which is the provisioning for remote work, right? And it's remote work, or the possibility of remote work, has been such a talking point for the last several years, and why you should let people work from home. I think the thing that I've realized, which I guess I just never consciously thought about, was just how many of these companies aren't set up to be able technologically to support remote work. Right? And so, like,
did you say that they're not set up?
They're not set up, right?
Okay.
And I mean, if you're talking about how do you access the core systems that you need to be able to do work, to say nothing of collaboration. I mean, certainly, like, we have instant messaging tools and we have those kind of things, and that's an adjustment, and there's a productivity lag there, perhaps, but people can certainly adjust. Right now, I think companies are struggling with that we're talking to are struggling with, like, literally, how do I execute against remote work? Can my technology support it at all? And then to what extent can they support it? They never really proof of concepted a large work from home movement for all of their workers, most of their workers, let alone all of them. So certainly that's number one.
So basically, what technology does most transportation companies lack that really eases into a crisis like we have right now, where people need to work from home?
Yeah, I mean, whether or not any of their, like, core systems are in the cloud, and certainly, like, there's there's true cloud and there's like, moving old systems into the cloud, or into a like server farm or something to that extent, if they're on-prem systems. But like it's really just antiquated systems. Things that you've heard me talk about a ton of times, Kevin, and anybody who's listening to me talk on Great Quarter Guys has heard me.
Yes, definitely.
Antiquated systems and the need to change and the need to be flexible. At the end of the day, like the biggest problem any of these companies are struggling with is the way that they're built, whether that's from technology, whether that's from organizational structure or process, is inflexible. And when there's a huge shock to the system like this, they're left reeling, and they didn't set up for maximum flexibility.
What do you think the biggest challenge will be for transportation companies working remote? You have technology, right? But let's say that you have good enough technology to do that.
I mean, speed to decision. Our clients in mass are getting hammered right now with orders, and certainly there's some shift, right? There's some like drayage, but like anybody who's shipping CPG or like e-commerce, orders are up. And I'm sure that Sonar data is showing the exact same thing. So like the need to make decisions quickly and have the information to make decisions quickly, and to the extent that they need to collaborate with everybody, they're making this turn. People will adjust to being able to collaborate remotely. They're just making this turn right now in the throes of having to proof of concept it. And so then certainly once they make that adjustment, will just be the ability to make decisions quickly enough to like deliver for their customers.
Do you have any, I got a quick question, Ryan. Do you know, or have you use cased or anything that would kind of tell you in a rough estimate way of how much productivity is going to be lost to this inflexibility? I mean, these guys are going to you're going to strain your IT resources tremendously in this environment, correct?
Yeah, that's you're asking a hard-hitting question, Zach, and I really appreciate it. I certainly don't have the data to put a number on it. I actually think what you're going to see when you're able to look back on it is that there is a lot of slack in certain part of your organization, and that things are too taut in other parts. And so to your point, like IT resources, to the extent that you have any of those, will likely be put to the test. But like there's going to be a light shined on some of the parts of the organization where like maybe you didn't need quite as many people. Now, I'm not suggesting you should just let those people go, but there is certainly an opportunity when we look back at this to maybe say we could move some people around, or we can be more efficient in how we assign work throughout the organization.
Right.
Yeah, I think it's going to be a little of both.
Yeah, I think we were talking earlier on an earlier show today about optimization and technological or any kind of workflow, and basically it's not a straight line curve, right? Or it's not a straight line. It's not a straight line.
It's not a straight line
curve.
Yeah.
It's curved. It's not a straight line. So basically, you don't have this normal growth of adoption of new technologies or different workflows. It typically takes a crisis to basically make it move exponentially. So basically,
shock the system.
Shock the system. So I think that's what we're going through right now. And do you think those underserved IT budgets in a lot of transportation companies, those will be brought up to the forefront of this is what we need to run this business successfully?
Certainly that's my hope for the industry. I mean, selfishly, that's my hope. But I think at a high level, that's my hope for the industry. In any hard times, there's winners and there's losers. And the winners are the people who say, like, there's blood in the streets, like, it's the time to buy, right? Mm-hmm. And so the organizations that make that decision are going to be the ones who come out of the other side of all of this. The economic implications and also the virus implications better for it, and they will be the winners. And the losers will certainly be the ones who, when this all turns around, go back to business as usual. And so, like, the question is, Do you have the stomach for it? You've heard me, again, Kevin, like you've heard me say, and I hate to sound like a broken record, you've heard me say that like you're making a bet on your business no matter what you do.
Mm-hmm.
And if you do business as usual, like you're making a bet that business as usual is good enough to sustain you. Like if you have the stomach to make big bets right now on your business, or even conservative bets, but ones that are really targeted to what's going to be like a difference maker for you in the future, you're going to come out of the other side of this ready to hit that upswing and really, really, really capitalize. In mass, do I think it will happen? No, it's not human nature. It's just not, right? But there will certainly be a large contingent of companies that say now is the time to really double down and invest so that when there is that upswing, we don't just see linear growth, we see exponential growth.
Nice. So I kind of want to piggyback on top of that. You sort of answered it there in a little bit of a way, but do you think there's going to be more of a movement towards this work at home environment? I know that a lot of the younger generation has been pushing for this for years, and of course there's all sorts of things that come along with that, but do you think that this might be a moment where companies actually start evaluating who, like certain segments of their population to go work from home, like more so than they were in the past?
Yeah, I think I was talking to Ryan Rogers from Covenant on Friday afternoon, and I said to him that if I'm Zoom, and he's a big fan of Zoom, if I'm Zoom, like I'm dancing in the streets right now, respectfully dancing in the streets, right? Because like that is going to be this is a huge proof of concept for them, and I keep using that term. This is a huge proof of concept for them of how it's possible. There are lots of reasons to let people work from home. It is more economical for an organization to let people work from home. You don't need as much office space. Like you're moving resources around a little bit, but like you don't have to worry about, having desks for people, having a space for them, like having provisions for them. So there certainly are some of those things, and this will remove some of that fear. Companies are going to have to get creative with how they keep employees engaged. I posted yesterday that I'm going to do like an office hours with CarrierDirect, and one of the topics I'm going to talk about is how do you keep employees engaged with a disparate workforce? We've never had to do that before as an industry. CarrierDirect, for instance, we have like our monthly happy hour on Thursday that we were supposed to have. Well, certainly we're not going to do that, but what we're going to do is have a virtual happy hour, right? Where like everybody's going to get on a Zoom, and we're going to, we have a little contest for like best background. And shout out to Anisha and Maggie, in our HR department, for coming up with that idea on short notice. There are ways in which you're going to have to adjust, and it's going to make communication better. So certainly I think there are going to be opportunities coming out of this to look at your workforce holistically and say, who are the people best suited to work from home, and how do we enable that going forward and save ourselves some money, some resources, et cetera.
I think there's going to be a big industry in people who can coach or basically consult on the communication side from remote workers in transportation, because it's difficult. You need real-time information from your colleagues and about certain loads, about certain lanes, about things like that. So it's very conducive to all being around together, where you can shout across the room and get answers really fast. And I think that's where remote working has its the largest challenge when it comes to transportation.
Well, that's like that to the point about technology earlier. I mean, that is what technology is trying to solve, and companies who haven't made an intentional investment in process and in technology to share information quickly and efficiently, the ones who are still relying on the ability, because their systems and tools don't do X, Y, or Z, to like shout across the room or like hand a physical printout of an order tender from one person to another to actually accomplish their work, they're going to struggle. They are absolutely going to struggle during this time. But the ones who have made that investment, and it's not just tech, like let's be clear about it. It's also process. It's also rules of engagement. It's also like provisioning job profiles to make sure that, people are doing a job and they're not doing 10 jobs and somebody else isn't doing 7 of those jobs and 3 other jobs. So certainly like that is a great point, Kevin. And it's going to shake out like who's done a good job at that and who's done a good job unsiloing information to be shared across organizations, and who's still operating off of Excel spreadsheets and, and physical printouts of order tenders.
No, don't tell me to get rid of my Excel.
I know, right? I want to keep my Excel.
You work in data, man. Come on. you work at a slower pace, right? The time to value is much different for you. I mean, transportation is all about speed, particularly for intermediaries, but for trucking companies too. It's speed to decision. The longer that it takes to make a decision, the more expensive it is. And it's really, really hard to quantify. I mean, it's a complicated equation. But the longer that you wait, the longer that it takes for you to make a decision to close, because you're struggling with optionality or you're struggling with getting information, you are losing money in doing that. You are a less efficient organization in doing that. So, I like Excel too, for its place.
Well said.
You mentioned Zoom a while ago. So we're doing every Tuesday and Thursday here at 12 p.m. Eastern Time. We're doing the coronavirus freight market update for the foreseeable future. And it was supposed to be, it is a call-in show, but Zoom is down apparently right now.
Yeah.
So they've gotten,
really?
yes, they've gotten,
Oh, wow.
I think the bandwidth has just disappeared from Zoom, which is good news for Zoom.
I think it's
I
fascinating.
did a Zoom earlier.
Oh, did you?
Oh,
Sorry, go
okay.
ahead, Zach.
No, I just think it's fascinating because we're kind of stress testing like the entire United States infrastructure at the same time.
Yeah. I did a Zoom earlier and it worked. And then after that, I had to do a Google Hangouts and I was dialing in and I got all lines are busy from Google.
Wow.
For like 3 or 4 minutes. So certainly, Zach, to your point, I was thinking earlier that we're stress testing the heck out of this. And it's interesting to see what the results are.
And I've been hearing, I put a post out on LinkedIn today to see how many people were working from home, and it seems like everyone's working from home right now. And a lot of people with kids and spouses are having fights over the Wi-Fi, and because their bandwidth itself, having everyone at home right now is basically stretched to the limit.
Yeah.
It's definitely an interesting problem.
It definitely is. I wouldn't say it's first world problems, but
First world problems, yeah.
First world problems, but it's kind of an issue that's global right now.
Yeah. And it's supposed to happen for at least the next 4 to 8 weeks.
Yeah.
So I'm curious to see how much, how quickly can these companies adapt? How quickly can they develop their technology over this period of time, remotely, off-site type stuff? It's definitely going to show up in some sort of income statement.
I think it is. I think there's the IT budget's going to grow in a lot of the transportation companies that really haven't adopted it yet going forward, because this is, as you said, is stress testing the system right now, and it's probably failing quite miserably for quite a few transportation companies.
Yeah, and a lot of transportation companies, as Ryan can attest to, ignore, and he's already said it, ignore this function. And they traditionally kind of push them into a maintenance role versus a development role.
Yes.
Is that accurate, Ryan, in what you've seen?
Yeah, certainly. I mean, we do technology delivery, and there are certainly some of our clients that invest in technology delivery, but it's not. It is not in remote work. It is speed to information, certainly, and that's an input to it. But remote work, real spoke and spoke model, if you will, is definitely not something that people invest a ton of time and energy into figuring out. And part of that is just, I would say, part of that has been prioritization. I mean, we've been, technology in this space is pretty antiquated, and so if you're hey, how high in the priority list is figuring out how our phone systems are going to operate seamlessly in a distributed workforce model. Like, I want to spend money on that, perhaps, but I'm also trying to figure out how to get off of an AS400, and that's a much meatier problem that'll have immediate implications for our business. Yeah,
I think that's huge right there. And again, we're kind of bashing on them right now, but let's take the opposite side for a second. I mean, I think we've all worked in a 400 before in a company that used it. So, when we were evaluating transitioning out of that, ourselves, the cost was just too high. And I mean, you're talking about an industry on the asset-based side, of course, you're talking about an industry that operates on about 5 to 10% margins on a good day. It's something that, it's easier said than done, especially from a cost perspective. So, I mean, there's certainly, you can't do it all at once, but some of that infrastructure requires you to dig up that mainframe and transition over. Is that accurate?
Well, absolutely. It's absolutely accurate. And I think there's a huge there's a huge shift in mindset that we need in this industry around the idea that we have to rip everything out and replace everything all in one fell swoop. Like we're used to like monolithic systems that try and solve every single problem that you have. But there's a way to, and this is what we work a lot with our clients on, and a lot of the conversations we have around technology are exactly this point, which is you have spent a lot of time and money over the last X number of years, right? 30 years or 20 years or 10 years, depending on how old you are as an organization, like winding all of these systems together. It is also going to take time to unwind them. And that starts with the business. It starts with what problems am I trying to solve within my business, and how do I apply technology to solve that problem? It is not go out and look for a system which solves every single problem. And so it's actually a little bit of a shift to say, what are the small improvements that I need to make? How do I look at this workflow or this problem and find software or build software that solves that problem? And how does it play in my ecosystem today?
So incremental change.
Yeah, absolutely. Yeah. An incremental buy or build from a technology perspective.
Yeah. Very good. Very great conversation, Ryan. We need to wrap it up and go to our long shorts before we head out. And you guys did it last week, you and Andrew, and
yeah, I was definitely wrong.
I know, right? So it's just last week they did a long short on NCAA tournament, whether they're actually going to hold it or not. That seems like it was weeks, months ago, but it's just 7 days ago.
It seems absurd at this point that I would have been short on it.
I know.
Now looking back on it, it's just unbelievable that I was anything other than long. Like, it's already canceled.
Yes.
That's how quickly things are changing.
Very good.
The last thing I'll say quickly before I let you guys go is that I'm excited to see how we all work together. That's part of the reason I'm doing this, like CD office hours. I'm talking with a couple of companies about putting together like a best practice group to help us like navigate this uncertain time. So I'm certainly excited as an industry how we come together and help each other get to the other side of this, because it's not a zero sum game. We all need to get to the other side.
So plug office hours and where they can find yourself and CarrierDirect.
Yeah, check me out on LinkedIn. Check out CarrierDirect on LinkedIn, and certainly on our website CarrierDirect.com. There'll be information both about this office hours and then also about this best practice group that we're putting together to kind of navigate COVID-19 along with Fuel Transport, which is a broker and trucking company out of Canada. So there'll be more information to come there on LinkedIn. And thanks for having me, guys. Good job.
You bet. Thanks, Ryan. All right, very good.
Yeah. It's a lot of good stuff in there.
There is, yeah. I think that's one of the things that people don't change unless they're forced to change.
It's human nature, like he said. I mean, it's and a lot of it you don't think about. You just say, well, it's working today. I've got these 15 other things to do. Yeah. I'll get to it later. But you don't really think about it until you have to.
Until you have to, and sometimes it shocks the system. And then I think coming out of this, IT will be. Technology is very important in transportation.
Yeah, huge.
Renaissance, but I think there'll be a lot more companies out there who take it much more seriously.
Yeah, I think there was kind of a renaissance on that front in the 90s among transportation companies. I mean, it's natural. It's a natural marriage of two things. And then all of a sudden, like the 2000s hit, and everybody's like, "No, we got it set up. We're good."
Yeah, I know, right?
And then just walked away.
I know. And 12 years in technology is a lifetime, many lifetimes. Really,
right?
It definitely is. So, let's do long short real quick, and then we'll wrap up the show. And the first one is Boeing. So Boeing stock is down 70% in the past month. I mean, that's just an outstanding number. The airlines and flights and limited travel is probably a big reason for that. They're still a massive defense contractor, great American company, and basically, they're likely to get bailed out if anything goes wrong.
Right.
So, are you long or short Boeing?
I'm definitely long in the long run on Boeing.
Yes.
I don't think that they're going anywhere for all the reasons you just stated. They're a massive defense contractor, but also they're like the backbone of the airline industry, which is also going to get bailed out.
They will. Yes.
Eventually, they will dig out. And if you tell me that you're going to give me a 70% discount on this thing,
I know, right?
I'm coming after you.
That's very attractive.
Yeah,
I mean, it's very attractive for a great American company.
And we are prisoners of the moment, as we all are. We get a little bit of that recency bias going, and they're going to recover eventually. What about you?
Definitely. I'm long.
Yeah.
I'm long. It's anything that the government will backstop is you can't go short.
Look at the insurance.
You never short that because right? it will blow up in your face very quickly.
Right on.
Anyone who shorted the banks in 2008, 2009 know that with a scar on their soul, right? And then our last one is Americans will get a stimulus check.
This to me doesn't do anything. It'll do more for others but it won't necessarily break through the economy. Think about a $1,000 check. What that's going to do for a lot of people in this country. It's great. It's a lot of money, and it's all coming back in, but it's not.
It will help people out who can't work for the next 2, 3, 4 weeks. So, they were talking about $1,000. Everyone get a $1,000 check. So I don't know what will come of it, but do you think it will happen?
Yeah, I think it will happen. I do
too.
I think it'll happen. I just don't think it's going to do that much.
Well, it's not going to be an economic recovery.
No,
right?
no.
Same with the stimulus checks back in 2008, I think.
Right. They didn't do it.
$500-600. It didn't really. It just prolonged the agony. But I think that in this situation, I think a lot of people I don't think really need it.
I don't think it's a bad thing, but I think it's probably something that we could target a little bit more. And also, I'm always a fan of doing the long run, the long game.
Yeah.
Like the things that are going to stimulate the economy in the long run that will, instead of these people getting a 1 week check that's going to float them for a couple of weeks, develop the economy so that they have a constant job, consistent
exactly
job.
Right, yes.
And that's the big question moving forward is how long are these companies going to be able to sustain without production?
You're exactly right.
Yeah.
I mean, basically, there's a lot of open question marks. Certainly, bars and restaurants are closing.
Right.
What comes next and for how long? It's something we all have to monitor.
For sure.
Definitely. Well, thank you very much for sitting in the last minute here on Great Quarter Guys. It's been a great show. Hope everyone enjoyed it, and catch us next Tuesday at 2 p.m. live on LinkedIn, YouTube. And then you can download the recording if you can't catch it live on anywhere podcasts are downloadable. But that's it for this week, and we are out.
All right. Thanks.